Imagine a world where every breakthrough, every innovation, and every leap in technology could be a golden ticket to your financial success. That's the power and promise of growth stocks. Hi, and welcome back to Money Matters, your trusted, all-inclusive channel for making finance easy and covering everything you should know about making your money work for you. Today's topic, growth stocks. Growth stocks represent companies that are on the cutting edge, pushing boundaries and redefining industries. These are the stocks that have the potential to deliver returns that outpace the market, all thanks to their rapid expansion and groundbreaking approaches. Today, we'll dive deep into the world of growth stocks, exploring their characteristics, understanding their potential, and guiding you on how to spot the next big thing in the stock market. I think a neat way to get you started would be to show you the characteristics of growth stocks. So what makes a stock a growth stock? It's not just about rapid expansion, but a combination of factors that set these stocks apart from the rest. Growth stocks typically belong to companies that are expected to grow their earnings at an above-average rate compared to other stocks in the market. Here are some defining characteristics. High earnings growth. These companies often report high earnings growth, which means they're making more money year after year. This is a clear indicator of their potential. Reinvestment. Instead of paying out dividends, growth companies often reinvest their profits back into the business. This could be for research, expansion, or acquisitions. Innovative products or services. They're often at the forefront of innovation, offering new products or services that are changing the game in their respective industries. High price to earnings, PE ratios. Growth stocks might seem expensive with high PE ratios, but investors are willing to pay a premium for the anticipated future growth. Market leaders. Many growth stocks are leaders in emerging industries or sectors. They're setting the trends and standards that others follow. Think about the companies you interact with daily or the products you can't live without. Are any of them growth stocks? Recognizing these characteristics in real-world examples can give you a head start in identifying potential investment opportunities. But what truly drives these stocks to such heights? It's the power of innovation. Let's delve deeper into how technological advancements and innovative business models fuel the rise of growth stocks. The innovation factor. In today's fast-paced world, innovation is the key that unlocks unprecedented growth. Think about the companies that have transformed our lives in just a few short years. They didn't just offer a product, they introduced groundbreaking solutions that reshaped entire industries. From the tech giants that revolutionized communication and information access to startups that brought forth unique solutions to age-old problems, it's clear, innovation is at the heart of growth stocks. These companies are often at the forefront of technological advancements, continuously pushing boundaries and setting new standards. But it's not just about technology. Innovative business models, like subscription services or direct-to-consumer approaches, have also paved the way for companies to achieve rapid growth. By identifying and capitalizing on untapped market needs, these businesses have managed to outpace their competitors and deliver impressive returns to their investors. So when you're eyeing potential growth stocks, look beyond the numbers. Ask yourself, is this company truly innovative? Are they doing something different that has the potential to disrupt the status quo? If the answer is yes, you might be onto a winner. Take a moment to think about the innovative companies you know. How have they impacted your life? And more importantly, where do you see the next wave of innovation coming from? While innovation offers incredible opportunities for growth, it's essential to remember that with great potential comes inherent risks. So as we marvel at the power of innovation, let's also dive into understanding the volatility and dynamics of growth stocks in our next segment, risks and rewards. The allure of growth stocks often lies in their potential for substantial returns, but as with any investment, there's no reward without risk. Growth stocks, known for their rapid ascent, can also be subject to swift downturns. Their prices can be more volatile due to factors like market sentiment, competitive landscapes, and economic shifts. Historically, growth stocks have shown a higher degree of price fluctuation compared to more stable, dividend-paying stocks. This volatility can be attributed to the company's reinvestment strategies, where profits are often poured back into the business rather than distributed to shareholders. While this can lead to accelerated growth, it can also result in periods of stagnation or decline if those investments don't pan out. However, the potential upside of growth stocks is undeniable. When a company's innovative approach or product takes off, early investors can see exponential returns on their investment. Think of the tech giants of today and how their early days were marked by rapid growth and expansion. But always remember, past performance is not indicative of future results. It's crucial to do your due diligence, understand the company's business model, and be prepared for the market's ups and downs. Ready to dive deeper? Let's explore some of the most notable success stories in the world of growth stocks and see what set them apart. Historical success stories. Every investor dreams of spotting the next big thing, and history is filled with examples of growth stocks that transformed into market juggernauts. Let's take a walk down memory lane and revisit some iconic success stories. Apple Inc. From a garage startup in the 1970s to a trillion-dollar tech titan, Apple's journey is the stuff of legends. Their continuous innovation, from the iPod to the iPhone, has made them a staple in growth portfolios. Amazon. Starting as an online bookstore in the mid-90s, Amazon quickly expanded its offerings. Today it's not just an e-commerce giant, but also a leader in cloud computing, streaming, and even grocery delivery. Netflix. Remember when Netflix was mailing out DVDs? No, me neither. Now it's a global streaming powerhouse with original content that's changed the entertainment landscape. As a small heads up, I'm an educator, not a licensed advisor. So just know I'm not accountable for the investments you make. That also means you should also see an actual advisor before tossing your money into something. Well, I'm not your dad, but, gotta say the line or do the time. Anyways, this also goes for the rest of the video. These companies, at their early stages, were classic growth stocks. They reinvested profits, innovated relentlessly, and expanded rapidly. But it's essential to note that for every success story, there are countless others that didn't make the cut. Investing in growth stocks requires a keen eye, thorough research, and most importantly, a willingness to embrace risk. Speaking of risk, how do growth stocks stack up against their counterpart, value stocks? Let's delve into the differences and see where each strategy shines. Growth versus value investing. When it comes to investing, two primary strategies often steal the spotlight: growth and value. While both aim for profits, their approaches and philosophies differ significantly. Growth investing. This strategy focuses on companies that display signs of above-average growth, even if the stock price appears expensive in terms of metrics like price-to-earnings ratios. Growth investors bank on the company's future potential rather than its current value. Value investing. On the flip side, value investors search for stocks that appear undervalued by the market. They believe the market overreacts to good and bad news, resulting in stock price movements that don't correspond with a company's long-term fundamentals. The goal? To capitalize on this overreaction. Want to know more? There should be a video popping up on the top right corner any moment now, see it? But why choose one over the other? Well, it's not always black and white. Some investors blend both strategies, seeking growth opportunities while also hunting for undervalued stocks. It's all about balancing potential rewards with risks. Now, while growth stocks can be found in various sectors, some industries are hotbeds for these high flyers. Curious about where most growth stocks emerge? Let's dive into that next. Sectors prone to growth. Every industry has its stars, but some sectors are just primed for explosive growth. Let's explore where most growth stocks tend to emerge. Tech. The tech sector is often the first that comes to mind when thinking of growth. Companies in this space are at the forefront of innovation, from AI to cloud computing. Giants like Apple have paved the way, but there's also a surge of startups harnessing the power of artificial intelligence to revolutionize industries. Biotech. This sector is all about breakthroughs. Companies here are working on revolutionary drugs, treatments, and medical technologies. Their stocks can soar on positive trial results or FDA approvals. Green energy. As the world shifts towards sustainable energy, companies in this sector, from solar panel manufacturers to electric vehicle makers, are experiencing rapid growth. E-commerce. The digital shopping revolution isn't slowing down. Companies that are innovating the online shopping experience or logistics behind it are seeing impressive growth. Fintech. Financial technology companies are reshaping how we bank, invest, and manage our finances. Their disruptive models often lead to rapid expansion and growth. These sectors are buzzing with growth potential, but it's essential to remember that with high reward comes high risk. So how do you sift through the noise and pinpoint the real gems? Evaluating them is both an art and a science. Let's dive into that next. Evaluating growth stocks. When it comes to growth stocks, not all that glitters is gold. So how do you separate the potential stars from the duds? Here's a guide to help you navigate. Revenue growth. This is the heart of a growth stock. Companies that consistently show increasing revenue year over year are on the right track. But it's not just about the numbers. The quality of that revenue matters too. Earnings and profit margins. While growth companies might not be profitable initially, it's essential to see a path to profitability. Look for improving earnings and expanding profit margins over time. Competitive advantage. Does the company have a unique product, technology, or service that sets it apart? Think about Apple's ecosystem or Amazon's logistics network. Management team. A visionary and competent leadership team can steer a company towards success. Research the backgrounds and track records of the top executives. Future growth opportunities. Consider the company's potential to expand into new markets, launch new products, or leverage technologies like AI to innovate further. Valuation metrics. While traditional metrics like PE ratios might be high for growth stocks, consider other valuation measures like price to sales or price to growth. Industry trends. Stay updated on broader industry trends. For instance, the rise of AI and machine learning is creating opportunities in various sectors. Remember, while these metrics and considerations are crucial, investing always comes with risks. It's essential to do your due diligence and, if possible, consult with financial experts. As we blend growth stocks into our portfolio, diversification becomes key. Let's explore that next. Diversifying with growth stocks, diversification. It's a word you've probably heard a lot in the investing world, but when it comes to growth stocks, it takes on a whole new dimension. Here's why. Balancing risk and reward. Growth stocks can be volatile. By diversifying, you spread the risk across various assets, ensuring that a single stock's poor performance doesn't sink your entire portfolio. Enhancing returns. While they come with higher risk, growth stocks also offer the potential for higher returns. Including them in your portfolio can boost overall performance, especially when other assets might be lagging. Accessing different sectors. Growth stocks aren't limited to the tech sector. From healthcare innovations to green energy solutions, diversifying allows you to tap into various industries' growth potentials. Geographic diversification. Growth opportunities aren't confined to one region. By diversifying geographically, you can benefit from growth trends in emerging markets or other booming economies. Adapting to market changes. The market is dynamic. As industries evolve and new trends emerge, having a diversified portfolio with growth stocks ensures you're well-positioned to adapt and capitalize on these changes. Alright, after exploring the ins and outs of growth stocks and understanding their place in a diversified portfolio, it's time to take a step back. Let's reflect on the transformative potential of these innovative investments and what they mean for the future of investing. On to our wrap-up. Conclusion. Growth stocks have always been the shining stars of the investment world, representing the forefront of innovation and the promise of future potential. From the tech giants that have revolutionized our daily lives to the emerging industries shaping our tomorrow, investing in growth is about believing in progress. But as with all investments, it's essential to do your homework, understand the risks, and stay informed. The world of growth stocks is vast and ever-evolving, but with the right knowledge and strategy, you can harness its power to propel your portfolio forward. Remember, the future belongs to those who believe in the beauty of their dreams. So dream big, invest wisely, and let innovation be your guide. As we close this chapter on growth stocks, I'd love to hear your thoughts and experiences. Have you invested in any growth stocks recently? What's your take on the future of innovative investing? Share your insights, and let's continue this conversation together. Every perspective adds value, and together, we can navigate the exciting world of growth investing. As we wrap up, we hope you found this video on growth stocks helpful. If you did, think about someone who might also benefit from this info. As you see, financial knowledge is of critical importance, especially in today's world. After all, we don't have our name for nothing. Money does matter. If you got someone, share it with them so they don't miss out. We'd love to hear your thoughts, so feel free to leave a comment below. If there's any topics you'd like to know more about, be sure to drop them in the comments. Your feedback helps us create content that serves your needs. Don't forget to like, comment, and subscribe to stay updated with all our latest videos. We have a lot more informative and exciting content planned for you. And that's all for today. Thank you for watching and investing your time with us. We hope to see you again next week here at Money Matters, because your money matters.